So it's that time of month again, and no, I'm not on my period, but let me just double check. No, it's clean down there, but it is that time of the month where we look at our eToro copy portfolio, the Coffee to 100k challenge. In this video, I'm going to tell you about the great month that we just had and what adjustments I've actually made to the portfolio to make sure we continue on this trajectory. I've took some profits, I've took some losses, but overall it was quite a good month. So without further ado, let's get into the eToro copy trader portfolio review, Coffee to 100k challenge. It's a lot to put on a t-shirt. If you've got any better ideas of names, drop them down in the comments and I'll see you just after this. So without further ado, we are back with the eToro Coffee to 100k challenge. That actually sounds a little bit better. Maybe we should go with that one. Now, YouTube does not pay me enough in AdSense revenue to give you financial advice, so please do your own due diligence when it comes to making any investment decision, and this does not constitutionalize as investment advice in any way, shape, or form. If you are new here, please do like, comment, and subscribe. More importantly, please double check that like button is turned blue if you haven't turned it blue already. If you want to support the channel, there's a Patreon link down in the description where you can get some exclusive perks, including our chat room and our WhatsApp group. And yes, you can actually copy this portfolio on eToro. But before you do so, make sure you sign up via the link on the pinned comment. Sign up, deposit, and make one simple trade, even if it was copying me, and you get free lifetime access to the previous said investment chat room for absolutely free if you sign up on the link. Now, what a roller coaster of a month. If you haven't checked out my last video where I talk about an actual incoming market crash in 2021, maybe we're already in it, who really knows? But last week was absolutely crazy. In fact, we've seen some mega sell-offs towards the end of the week, especially on Thursday and Friday. People tend to be pulling funds out of the speculation plays and going more into safe haven assets. But that said, Bitcoin, gold, all these apparent safe haven assets really went down as well. So who actually knows what the hell was going on there? But over the weekend, the stimulus package was passed at the House, so 1.9 trillion US dollars is coming to you at home, and it's going to be pumping up the stock market again, in my opinion, of course. But it was a crazy month. In fact, it was a very good month for one simple reason: taking profits. Now, as you know, I am not a very big Tesla bull. In fact, I think Tesla is very overvalued right now, and I'm picking on Tesla maybe too much here. But the problem with Tesla and GME when that was running, and maybe even Bitcoin to an extent, is people just say, I'm going to buy it and hold it forever because in 20-30 years time, it's going to be worth money, right? Well, maybe it will. In fairness, if they survive that long, Tesla probably will be. But the problem you've got right now is, why buy it here when you can get it at maybe a 50% discount in a market crash? It doesn't really make sense. Not to mention, in a market crash situation, people are gonna need to take profits because most people will be unemployed. So that's what tends to drive the stock price down even further. Now, I was around as a financial advisor in the last crash, in the recession, whatever you want to call it, in 2008 all the way through to 2014. Now, people say it stopped in 2009, but it was a double dip in 2011. But for that whole period, it was very volatile in my opinion. And I learned a valuable lesson there. You should be taking profits when you have them. And this is one of the things that I was doing. I seen that the market was getting a bit choppy, and I decided to cut some losses that actually went further down in companies like GSK. So I just got that out the portfolio completely, took a little L on it. It's not the end of the world, and lo and behold, it actually fell a hell of a lot more since when I cut it. So the way I see that is actually that could have been even a realized gain in a way, because my portfolio will be definitely down a lot more than what it would have been today. Another thing is taking profits into companies like ARKs. I was invested into 2 of the ARK ETFs, and I scaled out about a third in one of them. And the reason for that, I was up quite green, lock in profits, lock in gains, and invest it elsewhere. And I think I actually put it into Walmart. But I think the big lesson there is that when you get a big push up into any stock, whether you love it or hate it, like for example BP, if BP goes up to anywhere near my price target, I won't be in full size when it gets there. I'll probably be half out of my position already because you need to lock in gains. Look at GameStop, GME on its initial run. I know it was running a couple of days ago and fell flat on its arse. But with GME, the apes wanted to go to the moon, and quite frankly, they got lost in the airport. Many of them didn't take profits, and unfortunately, they've learned a very valuable but yet expensive lesson. But let's crack on with why you're here. The portfolio update, what is going on, what have I sold, more importantly, what have I bought, and have I made some good or bad decisions? Well, for those of you who are copying or even following me on eToro, you might have noticed on the portfolio, I've actually added in 2 more ARK ETFs. They were actually added to eToro's platform recently, I had to take them. Quite frankly, I had to take them because these are my two favorite ARK ETFs. And I was quite upset when they were not the ones initially added. Now with these two, they are obviously red, and I was expecting that, to be honest. This is a very, very small starter position. And as I add in funds every month, the $180 coffee money, I will be scaling into these into big red days. In fact, I already did this in one of them. So I think I will continuously be adding in. But in my head, one of them I got for half price because I took profits on another ARK ETF and used that to diversify into the ARK robotics. So that's what I'm saying. In big red days, I'm not panicking about that. And in fact, the reason that is coming down is because, as I said, everybody's selling out of the hype stocks. Everybody's looking for more safer plays and basically sat in a lot of cash. So the speculation plays and the innovation plays are getting hit the hardest. And I've said this for a long time. These are the ones who are going to be hit the hardest in a recession. So be very, very careful if you're just buying an individual company. And this is one of the reasons why I decided to go with the ARK ETF rather than go and buy Tesla individually, for example. So they can do the management for me. They're also diversifying within them. And also they are actually hedging into companies like Roche, where it'll do very, very well, very slowly over a long period of time. It'll go up. You get a solid dividend along the way, but it's better than sitting in cash. So they're actively managing their risk for me, and that's why I am a big fan of the ARK ETFs. But full disclosure, I'm expecting them to go very, very red in the coming months. Unless Biden's stimulus bill gets thrown out there and people just YOLO into stocks again, which is a very big possibility, to be honest. Now I hear you thinking, well, why buy them now, wait for them to come down? Well, I actually put a little bit of a hedge in a couple of days ago. In fact, over a week ago, I shorted Tesla. I know some people are not going to like this, but I decided to short Tesla because I think it was very, very overvalued. I got green very, very quickly and I put a stop loss at my entry. So right now, Tesla is a no-lose trade. And because Tesla is coming down, there's one of two outcomes here. One is ARK goes up, Tesla goes up, I close out at a break-even point on my short, but I'm green on my ARK Invest because after all, they're heavily invested into Tesla. And if that happens, great, I made money. If it doesn't happen and Tesla continues going down and ARK continues going down, well, I make money on Tesla. And I think the latter option is the more probable option, and in which case I'm going to lock in my gains on Tesla and buy into ARK near its lows, or as close to them as I can get. So I think we've sort of covered each other there with that little hedge, and I think it makes perfect sense. Now coming on to stocks in the portfolio, we have Alibaba. Now, I think Alibaba, everybody pretty much knows the name, the Asian Amazon, and I think Alibaba will do very well. Probably more so under a Biden presidency than a Trump presidency, and with the Jack Ma missing situation, we've actually seen Alibaba sell off hell of a lot. So I think that Alibaba is a very good value play. But that said, all the big plays like Alibaba, which is slight speculation but a legit company, will come down further, and I am looking at adding into them. I actually hold a lot of Alibaba ETF times 2 in another account, and I'm sizing in massive, and if that pays off, it's going to be a hell of a gain. Moving on to my favorite company of all time, it's BP, British Petroleum. Well, it's not really my favorite company of all time, but one of my favorite stocks. I'm currently up 13% on BP. I've got a decent entry, and I'm only going to add if BP actually goes red. I don't want to add into a winner here. I think we've got a good diversification currently in the portfolio, but if BP does come back down, I may look at adding into it. I love this company. I think it's got a big future with renewables. Oil prices will go up when the world reopens, and I think BP is very, very undervalued. That pays you a solid dividend. It's just a great company to look at in terms of value. In my opinion, of course, not financial advice. Staying on the London Stock Exchange, we've got BT, British Telecom. I also think this company is very, very undervalued. And again, I think that it has got it's sort of fell on a bit of hard times, and I think it still is quite a good value play. This one, I'm unsure if I will add to it because I think I've got a good entry, and I think over the next couple of months we will go very, very green on this one. But that said, I'd have to see the situation on why it's selling off if I go red. I'm not afraid to cut this one if we need to, but at the same time, I might add to it if we get the right opportunity. The top gainer in the portfolio went absolutely nuts recently, which is Cineworld. Cineworld Cinemas was facing bankruptcy a couple of months ago, apparently. I did a video on it. I strongly suggest you go and check it out. I didn't think Cineworld had a chance of going bankrupt, to be honest, unless we fell into a situation where the world is completely in lockdown and everybody knows it's going to be in lockdown. It's one of the biggest cinema chains in the world, and it has a lot of debt. It's no secret. But the good thing about it is the debt. The debt would keep it alive. If Cineworld did go bankrupt, the people who have loaned the money to Cineworld would have to write majority of it off because they don't have the assets to pay it. So I think that they were always going to recredit them. Now, long term, I don't think Cineworld will go back to what it was. Well, not for a long time, and I'm talking 5+ years. But where I got into Cineworld, which was very, very low, I'm currently up like 300% in it. I think at the recording of this video, it's like 280 or something like that. But at one point, I was up like 300%. Now, I did have a sell order waiting in my other accounts as well at 109, so £1.09. Around there, I'll be looking at taking off a quarter of this position. Quite frankly, because we need to take profits. You see, there's a theme here. We've got a new position alert. We've got gold. Yes, I have been buying gold. With what's going on in the world, I decided that every couple of months, I'm going to start buying about $50 into this gold ETF. And the reason for that is I have actually been buying physical gold. And by that, I mean physical gold. And the reason for that is I think that when the world does start crashing down, and I think we might be way over a year from that point in time, to be honest, but when it does, gold will do well. I like to buy physical gold rather than buy some ETF, to be honest. But the reason I did this is more to protect the people who are following me. I think if we build up a decent gold reserve over the next couple of months to a year, I think that when the recession does come, if we take a hit in the equity markets, we should see a benefit in into the gold and commodity markets. So I think that it's sort of me preparing for the inevitable, which is going to be a big crash. And on that, I'd love to know your thoughts on gold down in the comments. Have you been buying gold? Do you think it's a waste of time? And let me know whether you think the biggest safe haven is going to be when the world does come crashing down, because I think we're all in agreement it's going to come. Now, something that I wish I cut in the middle of the week, to be honest, and I was really thinking about selling it, was GoPro. GoPro missed earnings recently and fell about 10%. I bought in, and then since then, it's been slowly bouncing down. We're currently down about 8% on GoPro, and I'm really thinking about cutting it into any push. When we were down about -4%, I fingers on the trigger thinking about cutting it, and I didn't because I thought it could still turn around if we get the stimulus bill through. I was hoping that the House would pass the 1.9 trillion stimulus from Biden on Friday, and they didn't. And anyway, bit of a mess up all around, but they passed it today on Saturday. I'm recording this. And I think GoPro might get a decent push up, so I am willing to cut it, just in full transparency. I don't think it's a good long-term company. I do think it's slightly overvalued. I just thought it was oversold too quickly short-term, maybe a little bit of FOMO. I don't know, but I think it was a good plan, and we're not massively overexposed there anyway. Now, Lockheed Martin, we're currently down about 1.8, 1.9% on this one, and I will be sizing into this. So if you're not into Lockheed Martin, I strongly advise you don't copy me on eToro. This is going to be one of the biggest companies that I size into over the next 2 years. Lockheed Martin is adventuring into space, and it has some strategic partnerships there as well. As long as being a defense contractor from the US, which is also the biggest defense spender in the world, Lockheed Martin has got a hell of a bright future. Throw in the fact that it pays you a small but decent dividend every year, I think it's a no-brainer to be in. It's also very good value if you look at the chart. Another one of my favorite stocks back on the London Stock Exchange is Rolls-Royce. No, not the car company, because that would be crazy, but Rolls-Royce, the aerospace giant that it is. Rolls-Royce is also venturing into space. It's looking at building nuclear propulsion systems in space with the UK Space Agency. I think this could be massive. Of course, it's early days yet. But if it does work, well, literally, maybe not even to the moon, maybe to Mars. Who literally knows with this one? But in the meantime, if that doesn't work, it's still got a very undervalued industry in aerospace. Again, aerospace is literally on its arse. When people start ordering planes and moving again, Rolls-Royce should see natural benefits and go up in value. Rolls-Royce, in my opinion, is one of the darlings of the portfolio, and I think it's very, very overlooked. Of course, we've got the Tesla short. We're currently up around about 12% on that one. I've got around about a 30% price target on that before I start taking gains. We've got a new addition in Unilever. It's a solid company, to be honest. I think it is undervalued, and I will slowly size into it, into big dips. I can't see myself selling this one, to be honest. I think it's slightly undervalued, and again, when the world reopens and people start buying ice creams again, I think it'll do very, very well. And the final one, we are down 6% in Walmart. I have been building into this position, and I will continue building into Walmart. I think Walmart will be a solid company to be holding in the long run. We're coming up to a recession, and people need to buy guns and cereal. Both of them they can get at Walmart in the US. So I think Walmart will do very, very well. I just think that it is slowly on a downtrend, and I think we've got a good opportunity to size into that as we go on. So that's the current holdings in the portfolio as it stands. Now, this might update over the weekend, but as it stands, the portfolio made roughly 9% in February alone, which is, well, damn good, to be honest, given the fact that the market is shitting itself. There's no other easy way of saying it. I think we've done very, very well. Now, once the calculations have come in, and this might update slightly, and you'll see it on screen now, the final figure, but I think this will be a good month coming as well. We've got some very, very undervalued positions in the portfolio. We've got a few things we can add to, and I've got already the 180 I'm adding this month is pretty much allocated already, provided that the market doesn't move to the upside too much. So I'm very, very excited for the future. I think we're on track. If you are copying me on eToro, I just want to say, because someone was messaging me and a bit concerned, expect volatility when you first start copying someone on eToro, because you're buying in at a different price and it's going to take a while for you to get fully allocated. So just don't copy anyone unless you're looking at a minimum of a 6-month period, in my opinion. You need time to get in it, put the money away, lock it away, and then think about, by all means check on the progress. But literally I've had people up 9-10% in a month who are now up 2 or 3%. And then I've got people on the other way who are up 1% and now down 2%. So you've got to expect that volatility, especially in a volatile market. But I think the portfolio is in a good situation. Feel free, the links for the portfolio and my username is LWT Trading. You can go and check it out on eToro. Make sure you sign up with the eToro link in the comments, and you can get free access to the chat room. Message me there directly. Every week I post my updates on what I've bought and sold as well, but not just in my eToro portfolio, but also in my bigger portfolio. Okay, and we've got some big additions in there in the last couple of weeks. So yeah, make sure you sign up on that comment. Now, what I'd want to know from you is, what do you think is the worst position I hold in my portfolio? I don't want to know what you think the best is. I want to know, what do you think is the biggest, craziest, stupidest trade I've currently got in that portfolio? If you don't want to be harsh, then just comment the code word down below, which is runner. Yeah, bit of a weird one. That's it from me. Take care. Be very, very safe out there, and I wish you the best of luck for the next month. Take care. Peace.